Additional Chapter 4 examples. We're going to look at overhead costs applied on the basis of direct labor hours and on the basis of machine hours, and see the difference between using different rates. So the first question we have is, assume that factory overhead was applied on the basis of direct labor hours. Compute the predetermined factory overhead rate. First, we have to determine what our total overhead costs are. So we have departmental costs for A and B. Giving us total overhead costs of $487,000. If we allocate on the basis of direct labor hours, we see that we use 25 labor hours per unit, 15 in Department A and 10 in Department B, 25 total. We're expected to produce 1,000 units for the year. So to determine our overhead rate based on direct labor hours, we will take our total overhead costs divided by the total direct labor hours we predict to use for the year for the production of 1,000 units. And we get a rate of $19.48 per direct labor hour. The second question says, if factory overhead were applied on the basis of machine hours, what would the plant-wide overhead rate be? So we take our total 487,000 divided by the total number of machine hours. We use 20 machine hours per unit, 5 from Department A, 15 from Department B. 20 times 1,000 is 20,000 total machine hours, giving us a rate of $24. If we produce 1,000 units during the year, what is the total amount of applied factory overhead in each department in requirements 1 and 2? So using machine hours or direct labor hours, we have Department A and Department B. And using machine hours, we would have Department A and Department B. For Department A, if we use this rate of $19.48 per direct labor hour and take that times 1,000 units at 15 hours per unit, so $19.48 per direct labor hour times 15,000 hours. We apply $292,200 in overhead to Department A. In Department B, we take $19.48 per direct labor hour times $10 per unit times 1,000 units. for $194,800 applied to Department B. If we're using machine hours instead, we would take our rate of $24.35 times 5 machine hours per unit times 1,000 units for Department A. And for Department B, we take our $24.35 per machine hour times 15 machine hours per unit times 1,000 units. And we allocate $121,750 to Department A and $365,250 to Department B. So for asked, if you were asked to evaluate the performance of each department manager, which allocation basis or cost driver would you use and why? So we have a variety of situations here. If I'm the manager of Department B, I want you to use direct labor hours to allocate overhead to me because that lowers my costs, which makes my performance look better. If I'm the manager for Department A, I want you to use machine hours to allocate overhead. If I'm trying to evaluate both department managers, I'm going to use a departmental rate that is going to make the most sense for that department. So if we look here, we see that Department B has a far greater use of machine hours per unit than Department A does. So Department B's costs, I would allocate on the basis of machine hours. And Department A's costs, I would allocate on the basis of direct labor hours. When you compute the departmental overhead rate and apply for each department gets its own cost. So if we divide 244,000 by 15,000 direct labor hours, we get a rate per direct labor hour. If we take that times the 15,000 hours we use, we get 244,000. So if I'm using departmental rates and I give overhead costs estimated to these two departments, it's more of a true usage of their overhead costs than what we're seeing down here when we see a skewed usage based on volume. In this job costing example, we're asked to calculate the total manufacturing cost for job S and job T for July, and then calculate the amount of overapplied and underapplied overhead. So we have a lot of information here about job S and job T. We have our predetermined overhead rate is $42.50 per direct labor hour. We know that job S is completed and was shipped, and that job T is in process. We have information about the materials added to them, direct materials added to them, direct labor and indirect labor, and utilities, depreciation, and insurance. When we're calculating total manufacturing costs, those are direct materials, direct labor, and allocated overhead costs. So if we have job S and job T, we're going to have direct materials, direct labor, and our overhead allocation for both jobs. For job S, we have direct materials, $40,000, $500. Direct labor is $55,500, And our overhead application equals $42.50 times the number of direct labor hours applied to job S. For job T, we have direct labor hours, or direct materials, of $106,250. We have direct labor of $45,000. And we have an overhead calculation of $42.50 times times 4,275 hours. So the total cost for job S, $358,438.50. And the total cost for job T, $332,938.50. Part 1. 2 says, calculate the amount of over-applied and under-applied overhead. So we will make our overhead T account. We have applied overhead for each job. And then we have our actual overhead. We have indirect materials, $211,000, indirect labor of $133,000, and then total other overhead costs of $77,250. We sum our overhead account, debits and credits, to determine if we've over or under applied overhead. What we see here is that the credit side is higher than the debit side, which means we have over applied overhead. So over applied by $22,875, which we would write off to cost of goods sold. In our last example, we're applying overhead calculations to a service company. So we have information about a CPA firm's annual budget with total overhead expenses budgeted for the year of $2,720,000. This firm uses direct labor cost as the cost driver to apply overhead to clients. When we use direct labor hours, we calculate a rate per hour. When we use direct labor costs, we end up with a percentage amount that we use to allocate overhead. So we take our total overhead costs divided by the cost of direct labor. And what that gives us is 1.6. So we allocate at a rate of $1.6 per dollar of direct labor costs, or we have an allocation rate of 160%. The second thing that it asks us to do is allocate overhead to each of these jobs. So we take the amount of direct labor on that job times our 160% overhead allocation rate. And the last thing that this problem asks of us is to sum each job to determine what the total cost of the job is. We would then use those total costs to determine how much we're going to charge our client.